Finance Minister Enoch Godongwana has approved a temporary R1.50 per litre fuel levy reduction. He tabled the proposal in the National Assembly a short while ago. The reduction is expected to ease the pressure on motorists ahead of the expected fuel hikes that are happening in the coming month.
Temporary reduction of the general fuel levy by R1.50 per litre for the period 16th of April to 31st of May 2022. This will reduce the levy for petrol from R3.85 per litre to R2.35 per litre, and the levy on diesel to R3.70 per litre to R2.20 per litre. Of course, these amounts exclude the levies such as the Road Accident Fund levy and the carbon fuel levy. The intention of the temporary reduction of the fuel levy is to support a phasing in the fuel price increases that we are expecting in the short term. This will go somewhere in assisting South Africans to adjust to the new reality. Deputy Speaker, the proposed reduction of the general fuel levy for a period of 2 months will not require adjustment to the annual national budget, as the proposal is expected not to have an impact on the fiscal framework. The proposed reduction of the general fuel levy will be funded by a liquidation of a portion of the strategic crude oil reserves.
Marginal movements on the local bourse today. The local bourse closing off the day in the green, but like I say, not big movements as we've seen in previous days. Let's take a look at those numbers and we'll break those movements down with Martin Smith, who's standing by. Let's unpack the day's movements further with Martin Smith, Portfolio Manager at eNCA Capital. Thank you very much, as always, for your time, Martin. Let's start with those overall market movements. I've just said that the JSE ended the day flat, not big movements. But we did see in afternoon trading that Naspers and Prosus weighed down on the industrials. They were not having a good day.
Yeah, absolutely. I think we've had quite a lot of positivity this week on the back of potential positive talks or positive kind of developments with the Russia-Ukraine situation. It seemed like that was a little bit premature, and I think the market's now just trying to digest what's happening there, what's happening in kind of global oil markets. OPEC Plus met today as well. So I think the market's just kind of waiting and seeing what happens. I think investors want a little bit of certainty and a little bit of surety around some news flow. So I think investors are sitting kind of patiently for now. But our local market has held up relatively well. We've been quite solid, not just today, but over the rest of the year. But the story around Naspers is, you're 100% correct. I think it's definitely weighing on the JSE at the moment insofar as sentiment. And we've got to remember, I mean, we had those numbers out of 10 cent last week, not positive. Obviously, that's the big kind of fundamental driver of Naspers and Prosus. Not really the growth story it was a few years or over the last few years. So investors are feeling a bit negative around what's going on there. But I think also sentiments around Chinese tech is weighing very heavily on sentiment at the moment. But I think it's a good opportunity. I think it's a very good opportunity for Naspers and Prosus in the long term. Valuations and discounts and things are all at very extreme levels.
No, absolutely. What do you make of the rand's strength, Martin? It's been doing very well against major global currencies, particularly the US dollar. Your view on the outlook for the local unit, particularly for those of us who are motorists and have to consider these moves every month when the petrol price is determined?
Yeah. It's actually crazy what the rand's done this year. I mean, we've got to think about it. It was 16 rand to the dollar at the beginning of the year, and it's obviously moved to kind of 14.50, which is a massive move. Look, it moves on average around 250 to the dollar every year. It's the most volatile currency in the world and a proxy for EM. So it's the volatility is to be expected, but I think the strength, like you mentioned, has been quite surprising, specifically in a global backdrop of risk off, and global markets have been hit as hard as they have, but the rand's been very strong, and I think it's largely in the fact or largely a function of what commodity prices have done. And we are very much a commodity-driven economy. So I think as long as that continues and that story continues to have legs, I think we could see the rand push slightly higher.
No, absolutely. Let's get on to some company updates now. Standard Bank releasing their trading update. I mean, the story across the board for a lot of the operators in the industry is saying that there is some strong recovery that they're starting to see post the peak of the pandemic. But what did you make of the trading update that Standard Bank had to share?
You're 100% right. The banking sector is so well placed at the moment. They managed the COVID situation incredibly well with the way they provisioned and cut costs and looked after things. So the banks are in very much a sweet spot. If you look at, again, the kind of base they set for themselves, but also what's going to happen going forward. Like you said, you're having a pickup in activity, but also you're seeing an interest rates environment be very accommodative for the banks insofar as we're having interest rate hiking cycle kind of coming through here, which helps their margins. So banks are very much the flavor of the week, month, year, because again, they're very well positioned. Standard Bank came out with a bit of an update around exposure to Ukraine and Russia. The quantum, no real quantum was given, so people can't really figure out the exact maths of what that means, but probably slightly negative for the stock. I think we'll see some earnings downgrades come through, but there's also some other potential things that could kind of counteract that in the coming months and weeks, specifically the rest of Africa business. So does it maybe lag the rest of the sector? Probably, but again, banks, like you mentioned, and I'm in complete agreement, are very, very well positioned at the moment.
Absolutely. Thank you very much, Martin Smith, Portfolio Manager at eNCA Capital.